Hi, I'm Neil Schneider with the Small Business Development Center at the Florida Gulf Coast University. And we're going to talk about the PPP program, the Paycheck Protection Program, in reference specifically to sole proprietors, independent contractors, and a very, very small part of it for partnerships. The PPP program is one of the most popular programs around today, and the rules and regulations for self-employed people such as sole proprietors and subcontractors are quite different than the PPP for folks that are partnerships and corporations. So let's get started here. I'm going to bring up you to share my screen. And so let's talk about who we are. So the purpose of the program here is that we are is to educate the small business person, and that's the purpose of the program, in the areas of sole proprietors, independent contractors, and a little bit about partnerships. Who is the SBDC, or Small Business Development Center? We are an organization that's at the Florida Gulf Coast University, that's FGCU, and our purpose in life is to help small businesses start, run, and grow a business. We're sponsored and funded in part by the Small Business Administration, and what we do is we provide consulting, counseling, mentorship to small businesses around the country, but our particular district involves 5 counties in the southwest area of Florida. There's no cost to the employer and to the small business. Absolutely no cost at all. Our focus is on helping you. Our focus is on helping you start, run, and grow your business. It's a no-cost situation. It's a win-win for everybody. You get the services of a multitude of consultants who have expertise in every area of starting, running, and growing a business. Some of our consultants are still practitioners in the marketplace. Some of our consultants are retired practitioners in the marketplace. We all have practical and academic experience and knowledge. And our goal is to help make you successful. Again, I say we're at no cost, and you can get a hold of us at the Florida Gulf Coast University in Fort Myers. So let's start the presentation. These are some areas that you can use for some research on the IRS, the PPP, and also about the SBDC at Florida Gulf Coast University. Well, today's focus is strictly about the PPP. We remember that we got $2 trillion plus other billions of dollars more on a second run into the CARES Act. The focus of the Paycheck Protection Program is very simple. The focus is to keep people employed. Keep people employed. How do we keep people employed? Well, we help the employer, who is you, with some cash so that you can continue to pay those people until this pandemic or disaster slows down, so that you can go back in to start doing business and generating revenue and cash. So this is a loan that will eventually, if the money is used appropriately, be converted to a grant. So at the end of the day, it will hopefully convert to what we call free money to the employer, to the business, to the small sole proprietor or independent contractor. If the money is used appropriately, it will be forgiven. If any part of the money is not forgiven, it'll probably be rolled into a 1% loan for 20 months, 24 months, 2 years by the SBA or the federal government. 1% is not a bad deal, and I believe that they're going to give you 6 months of deferment to start to pay it back. It's almost like free money, but it's not 100% free money. It will be free money if it's used appropriately, and we'll talk about that throughout this presentation. So who's eligible? Well, this is all over the internet. It's been around since March. All these people, all these folks are eligible, all these types of businesses. The key element is that you have to have less than 500 employees, which I'm assuming sole proprietors do. Here's the key: sole proprietors and independent contractors are eligible, and so are partnerships and LLCs eligible. That's the key element here. What's covered? These are general statements to the PPP program. It is not necessarily applicable to all of the sole proprietors, and not all of it is necessarily applicable to sole proprietors and independent contractors. And we'll talk about these issues, but this is what the law says. The law says that you can cover all your wages, and what's included in wages is what you pay a person. Now, you cannot include subcontractors in your wages because they're going to apply for their own PPP loan. So you cannot include subcontractors in your wages, again, because they're not your employee, because they're their own employee. They work for themselves, and consequently, they're going to apply for their own PPP, and that's what we're talking about today. We're talking about those sole practitioners, the sole proprietorship, and the independent contractor who work for themselves. How can you apply for that PPP, and how can you get the money forgiven? That's what we're talking about here. General rules is that you use the money to pay wages, and the other amount of money that you can use is to pay utilities, rent, and interest on a mortgage. So that interest on a mortgage is very interesting because at first they only said on real estate mortgages, but now they've come out with an opinion that says that you can use it on interest on any mortgage or personal property that you have attached the loan to or given collateral loan for. Keep in mind that only wages up to $100,000 per year per employee are allowed to be included in the wages. This is a general definition of what the Act says that can be included in payroll costs. So if you have an employee, first of all, you got to have an employee. Many sole proprietors and independent contractors don't. If you have an employee, you can include all these items into their payroll costs, up to $100,000 worth of compensation a year, your paid vacation, any health insurance benefits that you pay them, any retirement money that you put into a retirement plan for them, and any state and local taxes that you're assessed on compensation, such as SUTA, S-U-T-A. SUTA is state unemployment tax. It does not include workers' compensation. I've had that many times, questions asked to me. It does not include workers' compensation, and it is, but it does include Florida unemployment compensation that you pay. Keep in mind that your wages, the sole proprietor's wages, are the wages that is your net profit. So on your net profit, which is also called net income, we calculate how much money you took in, how much money you paid out, and the difference is your net income. And we'll get into that in a little bit more detail. So how do we calculate this amount to borrow? And this is only to borrow, not to be forgiven. This is only to borrow. So if you're an independent contractor and sole proprietor and have no employees, you have to have a 2019 Schedule C, line 31 filled out. Now, I know that you don't have to file a tax return until July 15th of 2020 for 2019, but you can't get this loan if you don't have a Schedule C, line 31, net profit amount filled out, whether you've applied for, whether you've done your taxes or not done your taxes. So if you haven't done your taxes, you better create a Schedule C with your bookkeeper or accountant or yourself so that you can have this Schedule C, and the line 31 shows how much net profit or net income you made. If it's over $100,000, we hope it is, then you're only allowed to use $100,000. That's a maximum. The reality is that the SBA and the Treasury Department has made a determination that your salary is your income from line 31 of your Schedule C from 2019. So that's how much money you made. Therefore, they're treating that as your salary and your income. If you lost money or didn't make a profit in 2019, you can't apply for the loan. There's no money to give you because you had no income. You had no salary. You had no earnings. That's the way they've defined that, and that's the way they have, they, meaning the SB and the Treasury, have chosen to interpret the law. On the other hand, you also, if you did have income, then you take that line 31 and you then multiply it by 2.5. That's the amount, at the end of the day, that's the amount of money that you're allowed to borrow. Okay? How much can you borrow with no employees? Here's an example. Let's say your Schedule C, 2019, shows that your income, net income after expenses is $150,000. Well, we know that you can only use 100K of it. So we take the 100K, divide by 12, that's $8,333. We now also multiply it by 2.5, and you're allowed to borrow $20,833. You're allowed to borrow $20,833. Now, let's say you have an employee, and let's say your income is still, from the net income of your Schedule C, line 31 is $150,000. The maximum you're allowed to use is $100,000. So that gives you the same amount of money of $8,333. Now let's say you have an employee that works for you. Now keep in mind, this employee must be a W-2 employee. It cannot be a subcontractor. Why? Because that subcontractor can apply for their own PPP loan. So you have to show proof of evidence that you're paying this person on a W-2, and at the end of the day, supply a 941 to the banker who's going to approve your loan that you actually had an employee. So these are W-2 employees. Okay, I just need to make that very perfectly clear. So if that W-2 employee earns $48,000 for the year, we divide that by 12, that's $4,000 a month. So now your borrowing power, not your forgiveness power, your borrowing power is now $30,832. You take your $83.33, add the $4,000 to it, multiply it by 2.5. That's how much money you're allowed to borrow on the PPP. If you had no employees, again, here's a summary. The sole proprietor, the independent contractor, I use those synonymously, you must provide the 2019 Form 1040 Schedule C with your PPP loan application to substantiate the applied for PPP loan amount. If you don't have the Schedule C, you won't get past the gate to apply for your loan. That Schedule C is the #1 first requirement. You must detail all of the 1099s that somebody gave you. Show invoices, bank statements, or book records that you were in business in 2019. And you have to show proof of evidence that you're still in business in 2020. By the way, you go to your local bank, and this is where you show all the evidence, and you apply for the PPP. Some banks are asking you to pre-apply online. So let's say you have employees, and you're still that same sole proprietor and or a independent contractor. Same process of the previous slide, but now we have an employee and we have to show that we paid wages. So now we have to provide a W-2, a W-3. A W-3 is a summary of a W-2 that we send to the Department of Social Security to show them how much money we took out of the employee's paycheck for Social Security and Medicare tax. We have to show proof of evidence that we paid health insurance for that person if we did. We have to show proof of evidence that we put money into the retirement plan. Again, if that employee made more than $100,000, you're only allowed to use $100,000 for the year of that employee. And again, you can include in that employee's wages the amount of SUTA that we paid on their W-2 income. All this must be on the Schedule C and the Form 941 for the 2019 year, or you don't get through the gate at the bank. And you have to have proof of that Schedule C and 941, and I'll keep emphasizing that every slide. So how are we allowed to use the funds? Well, these are the general rules now. The general rules say that you have to use the funds 75% to keep people employed and 25% for utilities, rent, interest on mortgages. The utilities could be your cell phone bill. Your utilities could be your internet access. Keep in mind, these are the rules and regulations of how to get the loan. This is the general rules of how the loan needs to be used. These are not the rules 100% for the forgiveness of the money for sole proprietors and independent contractors. So we'll get to that in a minute. It's very confusing because there's different rules for sole proprietors and independent contractors than there are for partnerships and corporations. Also, there are different rules in relationship to the forgiveness and what the rules are to borrow the money for the sole proprietor and for the independent contractor. So here's the rules for forgiveness. It'll depend on the total amount of money spent over the period of 8 weeks in 2019. In 2019, 8 weeks from the day the loan is received on payroll costs. So this is 2019 numbers. So we take the 2019 payroll, maximum amount is $100,000, and we already know from the previous example that our business, we made over $100,000. So we take the $100,000, we divide it by 12, and we get the maximum amount of money that I'm allowed. And I'm allowed is $15,385. How do we come up with that? We come up with $100,000 and we multiply it by 852s of the 100,000, 852nd of the 100,000 to come up with 15,385. That's the maximum allowed that I'm going to be forgiven. Keep in mind, we could have borrowed $20,000 under the borrowing rules. But the maximum of a sole proprietor and a independent contract, according to the rules set down in the ruling of April 14th by the SBA and the Treasury Department, this is how they're going to deal with independent contractors and sole proprietors. Covered benefits for the employee do not include the owners. So if you're an owner and you have health insurance and retirement money, you cannot include that into your payroll cost because your payroll cost is simply the bottom line of your Schedule C 2019, line 31. That's it. And we're assuming here that it's $150,000. We're using $100,000 and we're taking 8/52 of it. And that's the maximum amount that you're going to be allowed to be forgiven. This is called the owner compensation replacement. So this money is going to replace the compensation that in theory that you made in 8 weeks in 2019 from your business. So if you had no employees, what's going to be forgiven? Well, the forgiveness is limited to the owner's compensation replacement from their 2019 Schedule C to 8 weeks worth of the net profit, maximum $100,000. The owner compensation replacement will not include the rent, utilities, or interest on the mortgage, according to the ruling, as I have the reference there in blue, by the IRS and the U.S. Treasury on April 14th in reference to how sole proprietors and independent contractors should have to pay back or what would be forgiven. It's not the same as corporations, is it? So let's do an example. If you didn't have any employees in 2019, net income was $150,000. That's on your Schedule C, line 31. The maximum you're allowed to use is $100K. The maximum amount of forgiveness then would be $15,384. We already calculated. And on the previous slide, we said that we borrowed $20,833. So what happens to the remaining $5,449? We're not sure, but we think that it's going to roll into a loan because you haven't used all the money that was given to you. And you cannot include, according to the ruling that's listed in the blue section there, the SBA Treasury ruling on April 14th, that independent contractors and independent contractors and self-employed individuals would not be allowed to use the other 25% for utilities, rent, and interest on a mortgage. Their logic in the ruling was that since most small businesses work out of their home and they don't pay for rent and they don't pay utilities, but even though they can deduct it on their income tax return, they actually do not pay these expenses, then it would not be fair for them to be allowed to be forgiven a loan for that amount of money. That's their logic, not my logic. So that $54.49 might be rolled into a loan, and it's not bad because it's a 1% loan for 24 months. And I believe they're giving you a 6-month deferral on it. 1% money is pretty cheap. Let's say that you have employees. We go back to the original example of employees. You're the same. So you got your 100K there. You got your 48K there. You're going to take 8/52 of that. So the maximum you're going to be allowed to be forgiven is $22,765. Well, wait a minute. We borrowed $30,832. Well, you got $8,067 that you haven't used. What happens to this? Same thing. It will probably be rolled into a loan of 1%, 24 months, and 6 months deferral. Keep in mind that these are the issues that we have to deal with as sole proprietors and independent contractors, and we are being treated differently than corporations. This is the example with employees. Okay, what documents do you need? Well, first of all, you got to certify that you are eligible for the PPP, so that this pandemic or this disaster has actually financially hurted you from an economic standpoint. If you have employees, you're going to have to show all 4 quarters of the 941 that you mailed into the IRS, plus the first quarter of 2020 to prove that you are still in business. Any state filings that you made, like in Florida, you would have filed quarterly reports for the state unemployment insurance. And you have to show evidence that you paid rent, utilities, and interest payments on a mortgage during that period, even though you're not allowed to be able to deduct it according to the new rule. Okay, so let's look at partnerships. Well, partnerships and partners are 2 different entities. So some people think that partners are sole proprietors. Well, they are sole proprietors by the tax code. Why? Because they still fill out their own tax return and they report their partnership income on that tax return. But according to the new ruling for April 14th, 2020, by the SBA and the Treasury Department, they're not going to be treating partners as a separate entity of the partnership. So they are not allowed to apply for a PPP. The partnership has to apply for the PPP. And how does the partnership calculate the earnings or the cost or the wages of that partner in their PPP application? Well, every partner gets a K1, and all that on that K1, on line 1, it shows how much profit or loss was allocated to that partner. And on line 4A, it shows the guaranteed payments that were made to that partner. So the ruling says that the partnership will take the 2019 K1, add up line 1 and line 4A, and that is the wages of that particular partner. And that's how the partnership is going to calculate the wages of each one of the partners. The partners cannot apply for the PPP themselves. It's a lot of stuff to think about and a lot of stuff to mull over and a lot of unknowns out there still. Even I have some concerns about these new rulings and what other new rulings are going to come out. And there's a great deal of information out there on the internet. Some's correct, and some is old, and some is actually not even correct. You have to understand the source of which you're getting it from and evaluate whether that's a credible source. I have read a lot of stuff on the internet that is not credible. For example, they say that your mortgage payment is allowed to be part of that PPP 25%. Well, your mortgage payment is not. It's only the interest that's allowed to be. And I can go on and on. Information changes regularly with a lot of confusion and frustration, and in my opinion, creates a big amount of unknowns to the small business person, especially the sole proprietor and the independent contractor who doesn't necessarily have the resources to get the real information and how to act. My best advice is to go to your banker and evaluate it with them, because they're the ones that are going to approve the loan and they're the ones that are going to approve the forgiveness of the loan. So my first stop would be at with the banker, and the second stop would be at the SBDC consultant and with your accountant. We're always here to help you. If you have any questions, comments, there's my email address. And I hope this works out for you. And it's been a very, very, very challenging time for everybody. And if I can help you in any way at all, please let me know.